With the stock market having run in overdrive for months now, and with everyone acting like it's 2021 all over again, with all the to the moon price targets and every ridiculous 2040 models and everything else, along with a geopolitical environment getting turned upside down with tariffs hitting everywhere, the setup for a crash is coming. And I gotta say, some things are lining up for just that to happen. I can't say it's not a possibility because it is a possibility. But the question you guys need answers to is not if this epic run-up will continue, because honestly, nobody knows, and Wall Street can get absolutely more stupid to the upside. It's also not if the stock market crashes, because, well, the market crash cycle seems to be accelerating, so you're going to get one of those eventually too. And it's not, is a crash actually about to start? Because all the idiots guess one is coming every 6 months or so eventually they will be right. But the reality is nobody has any clue, or we would have trillionaire investors out there. But since none of those exist, trying to answer that question is absolutely useless. The question you actually need answers to is this setup here for a potential crash, and exactly what to do about it? And that is what we will answer here today. Just make sure you like the video if you like getting the truth without the hype, guys. If you want all the hypey, scary, I don't know, whatever to the moon and whatever, worst market ever, this isn't the right channel for you. But if you like getting the truth without the hype, absolutely please like the video. That's the best way you can show all of us creators that you're enjoying our content. Now, if you've been watching my channel for any length of time, you know I couldn't care less about making short-term predictions of any kind, guys. And let me show you exactly why. Everyone was guessing a big bad recession was coming in 2023 after that crazy 2022 we had, until it actually didn't happen. So then they just moved it on to 2024. That's when it's going to happen. And as we saw, not a recession in sight in 2024. So now it's coming finally in 2025. The same exact thing applies to a market crash. We actually got a little bit of a crash in 2022, but yet people couldn't help themselves during that time. In October, at those lows, back then, guys, back then in October, they were saying this is just the beginning. It's going to get a lot worse, and all kinds of other stuff like that were the driving narrative across the media, across YouTube, everywhere. Almost everyone was saying the same exact thing. And of course, it didn't happen. So then it was the big crash was coming in 2023, and the exact opposite of a crash happened instead, and the market rallied big. And many of us right here on this channel, in my group, myself personally, we made 50%, 70%, 100+% gains in 2023 while everybody else was busy predicting a crash. So of course, it was the same with 2024. And it was yet again another triple-digit year for many of us who ignored all that crash garbage. I mean, think about this for just a second. Think about that entire scenario. Many of us right here on this channel, in my group, you guys out there put massive amounts of money into the market in 2022, then added on the dip in 2023 and managed to double our portfolios that year, and then bought all the dips again in 2024, which, yes, guys, there was a lot of dips and great stocks in 2024. We're talking, Palantir in the teens and low 20s, for example. And man, I wish you would have bought that dip, right? We all say, I wish you would have bought more. Very, very true then. And then we saw our portfolios double up again from there on those even bigger numbers that we had built up in 2023. Those are incredible, life-changing gains in just 2 years if you ignored everything and just executed. And guys, I've been doing this for over 25 years. The same exact narrative happened in 2009 after that crash. The same exact thing happened in 2020 after the entire world shutdown happened. And basically, you missed out on an absolute fortune in 2022 and 2023 and 2024 if you were worried about a recession or a crash getting worse, instead of just buying stocks like Meta in the 80s and Google in the 80s, Amazon in the 80s, Tesla in the 100s. Basically, it would run up, fall back down to the 100s for a few years after that. Palantir, all the way back in the 5s, back in 2022, all the way up to $7 after they turned a profit, if you can believe that, and on and on and on and on. We got 100% to over 1,000% moves in incredible companies. Best of the best. Basically, penny stock gains in the best companies in the world. And we saw those epic gains on this channel because we weren't concerned with guessing when the crash will happen or when it will bottom or if we're going to have a recession or not, like everybody seemed to be making endless predictions about. We were concerned with valuations and executing to our plans and controlling what we can control instead of blindly guessing or blindly listening to other smart folks who are just guessing too on all this sort of stuff. Seriously, guys, just because you use big words and throw up a lot of charts and graphs and pretty little spreadsheets doesn't negate the fact that everyone is just guessing about all that trash in the end. Nothing confirms anything, and every can't miss indicator that's 100% accurate predicting recessions and crashes and all that sort of time have failed every single time over this time frame. So I feel the same exact way about all the tariff noise that's out there. The past 2 administrations have used them, and the impact has been very minor, but when it comes to stocks, the impact actually was major. But what I meant was like major gains. The S&P went from just over 2,000 to over 6,000 in that time frame, so I love that impact. And my individual stocks are up significantly more than that during that time frame of all these tariffs and all these other big scary things that go on around tariffs that everybody's always talked about. So I love that impact. Now, to be very, very clear and fair, there will be some effect on some companies. And there is no doubt that traders will trade the narrative and create short-term effects and craziness and all other good stuff like that. But it won't affect all companies. And more importantly, the great companies that we are hopefully all buying and holding will navigate it wonderfully. And this is a big if, guys, because nobody knows, but if your favorite company falls big, it's just a golden opportunity if you aren't speculating or worrying about the narratives and anything else and just buying great companies on a discount. So let's look at facts, not speculation, not a media narrative, not a YouTube narrative, but let's look at facts around the market, around a market crash, and then we will discuss how to position yourself to really take advantage of this market, regardless of whether it crashes, whatever the case is, whatever noise is out there. You shouldn't even care, ignore it. But more importantly, you're going to be prepared to take advantage of it, which is what we need to do as investors. That's how you get, triple digit gains multiple years in a row by doing exactly that. So fact number 1, the market corrects 3 to 4 times every year. That is the average, guys, which means some years you're going to have more times that it does that. And sometimes it's going to be less, but it's not unusual or something to be feared at all or worried about or sell out of your stocks and go all cash and try to time it and all that other good stuff like that. And honestly, if your favorite stocks have been running hot the past 6 months or so, your correction might very well be larger than others. But every time it corrects, it is a great buy the dip opportunity. And yes, we will talk about how to identify those times in just a second. I promise I have an easy way to identify it and pounce on those opportunities and be able to tell, is it still overvalued and I should still stay away, or should I go ahead and buy that dip? I know that can be confusing, especially with all the noise out there. We'll talk about an easy way to identify that and pounce on it in just a second. So fact number 2, the stock market is red hot. Well, per the usual, Wall Street significantly underperformed the indexes once again last year. Basically, the market was up massively, but many hedge funds were barely positive, and many actually lost money last year, which I don't even know how you do that, but they did. They managed to do that. It was a great year for stocks, but embarrassingly bad for hedge funds overall. Obviously, there were some that performed great, but for a lot of them, it was really, really embarrassing. Remember, the big play on Wall Street was to go all cash or heavy cash in September and October, which are historically, bad anyways, until we get through the crazy election cycle, and that could create all these bad scenarios and all this other stuff like that. Well, honestly, that was a terrible call as the market rallied massively in September and October, which forced all those funds that were way behind, they're way behind everybody to basically pile into the market too and start trying to pump stocks to save face, and more importantly, their bonuses, which means stocks rallied in November and December and into January as well. I mean, even some of our favorite Wall Streeters and YouTubers fell into this trading trap and were stuck chasing as well. Regardless of how or why it's happening, the market is red hot still, and I don't think too many people would argue that it's not overheated. Fact number 3, stock market crashes happen every 6 to 8 years. So we just had one in 2022, so we aren't due for a while, but I hear you guys right now. I mean, we had one in 2020 and then in 2022, so obviously it can happen a lot more often than that every 6 to 8 years. I agree completely with you guys. No doubt about it. Matter of fact, I do think long-term, that crash cycle will probably start to come quicker. They'll happen more often. No, proof of that or anything else. It just seems like it's been accelerating over time as we have, obviously with the internet age and digital trading and everything else, just seems like that number continues to shrink. Now, it doesn't mean it's going to go from 6 years to 2 years or anything crazy like that. Just we may see that average go from, 6 to 8 years to 5 to 7 years or so. But let's see and take a look at why the last 4 crashes happened to see if there's kind of any clues in there to kind of predict the next one. Let's see if we can predict the next crash. So obviously back in the early 2000s, we had the dot-com crash. I lived it. I lost a lot of money because I made every single mistake we talk about here on this channel on steroids. I did them all. So we had a massive crash there. And everybody's talking about how the AI hype is exactly like that crash back then, which I actually covered in a video up there. You can check that out if you want. But analyzing both, the AI bubble does not come close to the internet bubble back then. So that really wouldn't be a reason for a crash right now, at least a massive crash like the dot-com crash, because we don't have companies with a PowerPoint selling for hundreds of billions of dollars in market cap. And oh, by the way, not just a few, like that was a normal weekly thing back then for companies to go to the moon because, well, the internet, I don't know, they got a website, they know how to do it. So they're going to win. No, monetization, no nothing else involved in that sort of stuff, just PowerPoints and a website. And that got you a $100 million valuation. It was utter madness back then. So check out that video up there. I'm not going to rehash it here, but I really don't think that was a predictor of a crash per se, because we're not to that level yet, not even close to that level yet. Oh, let's see. In 2008 was the next big crash where we basically had the meltdown of the entire global financial system. And I'm pretty sure you can't predict that with any indicator or chart. So another impossible prediction to make. I understand Michael Burry got it right. He got one part of the puzzle right. He didn't see the entire thing collapsing and everything else that kind of happened. That's more lure than it is him actually identifying a problem over here. But that's okay. That doesn't make for a good movie and all that good stuff. So, it kind of is what it is there at that stage. So outside of one person, nobody else predicted it. Wasn't on anybody else's bingo cards. So unless you're that one person, you're not predicting anything. So that one was another basically impossible scenario. So next crash, really, really great time for a long time until 2020, where we had this shutdown of the entire world. And yeah, I'm pretty sure no chart or graph can predict that. So another black swan event that created a crash in the market. And once again, in 2022, inflation went up to the highest in 40 years, and the Fed raised the rates at the fastest rate ever. And again, I'm not sure anybody had that on their bingo card in 2021 when everybody was telling you to buy everything, like Tesla at 400, for example, because, well, reasons, that's why you should be buying it then. I mean, if you knew that we were going to have this giant crash in 2022 and this massive inflation and everything else, that was the worst play to make. But yet that wasn't what was going on out there. Nobody had that on their bingo card in 2022. So what is it today that can tell us when it's going to happen? I mean, maybe all the pretty charts and graphs everybody's screamed about and have been screaming about since 2009, 2010, 2011, 2012, and every single year in between all of those crash times, the same folks throw up the same charts, the same graphs, the same can't miss whatevers. Did those charts get it right? Or were there other events like the entire world shutting down, for example, that created those crashes in the end? Because I don't think the market crashes in 2020 if the world doesn't shut down. I'm sorry, that's just what the facts show me. So the facts show me that what is going to cause the next crash is not known by anybody, much less a pretty chart or graph or spreadsheet or commentary on the crazy geopolitical narratives like tariffs. And just for proof of that, just to kind of discuss that here a little bit, just in the past couple of years, we have had multiple wars break out, invasions, threats of invasions, BRICS gaining steam and, quote unquote, ending the dollar supposedly, and all kinds of other geopolitical messes across the world. And guess what? The market is still near all-time highs. So to me, if you try to guess this sort of stuff or figure it out or whatever the case is or waste any time on it, you're going to be wrong most of the time and miss out on fortunes in between while you're busy guessing. Guessing a crash is a fool's errand. It is stupid. And yes, when it finally happens, that person that guessed wrong 37 times before they finally got it right will be there saying, see, I told you so. But, they conveniently ignore the fact that they were wrong 36 straight times, while those that didn't play those games and ignored those morons were right 36 out of 37 times. And then on top of that, when the moron was right that 1 out of 37 times, those folks had the guts to buy the crash when it finally happened instead of being all kinds of scared and all that other good stuff. That's what we did in 2022, for example. And that is what I want you to be able to do as well. That's the situation you need to be in. Not trying to guess this or that and being wrong 36 out of 37 times, but simply when that one time happens, you are so prepared, you're not scared at all, and you can take advantage and make a lot of money. So these are the 5 steps I take to avoid buying the hype runs like we're getting right now and put myself in an even better position to take advantage once again if a crash, if a correction, or a recession, or whatever craziness actually hits, you will be prepared. So step number 1 is do evaluation. I know I say it all the time on this channel. I know we teach it right there in my group. We have free coaching on it, courses on it. You can ask me about it. All that sort of stuff is involved in there. And the earnings flash sale ends this weekend, so make sure you take advantage of it. But I totally understand if that's not right for you. No problem. Google it. Join another group. It doesn't freaking matter. You need to learn how to do evaluation. That is the key. That is the base. That's kind of the foundation to being able to take advantage of any craziness up or down in the market, because you'll be able to easily spot overvalued hype and you'll be able to easily spot undervalued golden opportunities if you do evaluation. If you don't, well, then you're lost and you're going to continue to be lost. And unfortunately, you're going to be stuck just trying to listen to this YouTuber or this person on the news or, your favorite news source or an article or whatever the case is, which means you're just going to be stuck on this roller coaster and, end up doing what mostly we do as retail, unfortunately, which is buy high and sell low. And unfortunately and sadly, that's what most folks do. I don't want you guys to be in that, but that base level, that foundation there has to be there. Valuation. Number 2, plan every move. All right, great. You did your valuation. Now what's your plan? When the stock hits your valuation, what are you going to do? How are you going to move into that position? Are you just going to do a DCA? Are you going to do a modified DCA? Are you going to have continual price targets on the way down? How much money do you want to put into it? Do you have all the stocks identified you want to go into? Not waiting until it crashes and then deciding, ooh, which one do I think I want? Which one's in a better position? No, screw that. Plan all that stuff ahead of time so that way, as the crash happens, or the run-up happens, whichever the case, you have every single move planned out. You know what to do. So when emotions take over, which are natural, we all get emotions when it gets crazy out there. I can just refer to my plan that was made without emotions and go, okay, that's exactly what I'm doing, and I'm moving forward. The biggest mistake that retail investors make, and even large institutional investors make, is letting emotions drive the narrative and then drive moves in your portfolio. You can't do that. Let your plan tell you exactly what to do. Let that be the the deciding factor when those emotions are running high. You might not feel better, but you'll make the right move for you. And trust me, I don't want to feel good in the short term. I want to feel incredible in the long run. That's how you do it. Number 3, pull cash while runs are happening. Don't be afraid to pull cash while runs are happening and everybody's throwing out crazy price targets and ridiculous 20/40 spreadsheets and all the other trash that's out there telling you this is going to the moon, that's going to the moon. Valuations don't matter. All that other stuff like that. I understand. It's popular. It gets you lots of clicks. I know. Trust me. If I say anything positive about Tesla, to the moon, everybody loves me. I'm great. The moment I say, hey, valuation matters, guys, and Tesla at 1,000 PE is probably going to trade down or flat for years, which is exactly what happened. Oh man, I'm the worst person ever. I don't know what I'm talking about. I don't understand Tesla. I don't understand FSD. I don't understand anything else like that. No, maybe I don't, but I understand investing. And that's how investing works. And that's exactly what happened. So I was not afraid to back off during those times and pull up my cash because runs happen all the time. It's very, very common in the stock market for stocks to get overvalued and then go back down to undervalued. It's not this linear line up, which would be great. It kind of goes, here's fair value. Hey, it gets above fair value, then it goes down below fair value. And I try to buy as much as I can down here below the fair value line, which means I've got to be patient, but it also means I'm pulling up cash in that meantime so I can buy heavier whenever it's lower. That's how you win at this game. Not just buying no matter what, unless you're DCAing, that's a totally different, that time that's a different strategy altogether. Yeah, you're right. You just buy in your schedule and you move on. But too many folks are not buying these lows because of narratives and all these other things. And then the moment it goes on a hype run, they're buying all the hype and buying at top. Again, that's how you end up in buy high, sell low scenarios, and you don't want to be in that. Number 4, work on my money loops. Kind of hard to buy the dip, buy the crash, buy anything if you don't have money coming in to invest in the first place. So money loops are just as critical as valuations and everything else. And your first money loop is control your finances to where you're living below your means. And then you start adding on additional money loops, whether that be through real estate, other investments, a side hustle, all those sort of things like that. So many folks are like, oh, I don't want to do that. It's only going to make me $100 a month or whatever the case is. Well, that's how everybody's money loops start. My money loops now started exactly like that, but here we are 15, 20 years later, and they're incredibly massive. So I can dump lots of money into the market. Why? Because I didn't go, well, it's only $100. Let me not do that. I just went, okay, let me stack $100 here, $100 there, $50 there, on and on and on. You do that over the course of a decade or two, which seems like a long time, unless you're older like myself, then you realize that's not that long at all. All of a sudden, before you know it, you have plenty of money to buy all the dips and to take advantage of all the opportunities that are out there. But it starts with controlling your money first and then working on that first $50 extra coming in every month, and then $100 after that, and continually chipping away at that for years. You don't want to do that? Well, then you're stuck just basically lottery investing, and that doesn't work out well for the vast majority of folks, since that's what the vast majority of folks do. And I don't know anybody who has built wealth that way. Every single millionaire that I know, and I deal and interact with plenty of them, made it by consistently investing in the market and increasing their money loops over time. Every single one of them. So it's, to me, it's a must in order to be a wealthy investor. Number 5, pounce when the fear is high. I see mass chaos when I'm in my group and people are asking lots of fear-based questions. Every YouTuber out there is putting out a fear-based video. Obviously, the media is in overdrive about how this is the worst thing ever, and this could happen and that happen, and everybody's speculating everywhere. Because I've done the previous 4 steps that we just talked about, I just simply execute and pounce when the fear is high. That does not mean I'm going to time the bottom, because I won't. Not even close. I have never timed it before, but yet every single time I pounce when the fear is high, not immediately, I look stupid in the short term, but in the long run, folks are like, that was a genius buy. How did you know to do that? How did you know to do this? I didn't know anything. I just knew valuation. I did the 4 steps that we just talked about, and I pounced when the fear was high. Over the long run, you will be a massive winner and look like a quote unquote genius. And you don't have to be a genius at all, but that's what you'll look like when you pounce when the fear is high. You just have to get past the idea of the fear in the first place. And of course, the scrutiny of looking dumb in the short term. In 2022, I looked dumb. I looked dumb when I bought Palantir at $7 and it fell down to, actually it did fall into the 5s for a little bit. I don't think I grabbed any shares then, but point being, I bought it at $7, $8, $9 and it fell down. If you bought it at $9, it went down to $6. That's a massive haircut from there. And you were already buying the dip from there and you looked dumb in the short term. But here we are now with Palantir, right around the $80 mark or so. Now you tell me how you look in regards to owning Palantir now, regardless of whether you bought at 6 or at 9, or obviously I bought both at that stage. I think you're looking really, really smart, but you had to look dumb in the short term in order to look great in the long run. And if you want to learn how to do exactly all this step by step with courses that you can follow, with free coaching that goes along with that, and direct access to me to ask questions, jump on our live Q&As, and the best 6, 7, and 8-figure Discord helping you deal with all the different narratives, all the different stuff out there. Make sure you check out the pinned comment. Take advantage of the earnings flash sale that ends this weekend where you get all that. And again, if it's not right for you, totally understand. Get the information somewhere and learn this stuff. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.